Hello guys, welcome. This is Deepika from wealthandhealthmastery.com, and in today's video we are going to review another very undervalued stock at the moment, which is PayPal, and we are going to see if this stock is a good buying opportunity or not. So first thing is, what we're going to do is we're going to take a look at their earnings and also the stock performance, how the stock has performed in the last couple of years. And then we are going to take a look at some of the important figures like revenue growth. Then we'll look at the margins, the PE ratio, the PS ratio, the gross profit. And based on all these numbers, we'll decide if this stock is a good buying opportunity or not. So let's get started. The first thing is, let's take a look at how the stock has performed over the last couple of years. So currently the stock is up. So if I go here and look at today's, the stock is up 6.58% because they just released their earnings, and because they had a good earnings report, that's why the stock is up currently. In the last 1 month, the stock has gained 8.70%, which is a good sign. In the last 6 months, the stock went down by 1.32%. Year to date, the stock has gained 2.25%. In the last 1 year, the stock is down by 17.12%. And in the last 5 years, the stock is down by 41.32%. So in the last 5 years, the stock has gone down by almost 42%, which is not a good sign, right? Nobody wants to keep a stock which is going down. But this could be a good buying opportunity also. But before we make a decision, let's take a look at their all-time high. The all-time high is 81.06%. It started in the year 2015, and since 2015, in the last 10 years, the stock is giving you 81.02% return. Now let's take a look at their PE ratio. So the PE ratio is 15.77. That's a lower PE ratio compared to the industry standards. Now, how much is the industry standards around the same industry? Industry's PE ratio is 133.66. So that tells me the PayPal is below its industry standards. The PE ratio is below its industry standards. So this is right now a cheap stock. But is this stock a good buying stock or not at the moment? We are going to take a look at it. Now let's take a look at their earnings. So if I go over to the PayPal earnings, let's see how much they have done in the last 4 quarters. So they just reported their earnings, and for June 2024, they have beaten up the EPS by 20.63% and the revenue by 0.82%. So that is a good news. Now in March of 2024, the revenue has increased by 9.36%. In December also, the revenue went up by 8.71%, September 8.36%, and in June is around 7.07%. So PayPal is having a steady growth here, right? The revenue is increasing less than 10%, but it is in the increasing phase, which is a good sign, right? Even though the stock is undervalued at the moment, but the earnings are growing at about rate of less than 10%. Between 7 to 8% right now, which is a good sign. The net income, if you look at in the March of 2024, net income increased by 11.7%, which is good. Diluted EPS, the earnings per share, has increased by 18.57%, which is good news. So the earnings have increased. Profit margin have increased by 2.13%, which is good. Operating income went up by 18.83%, and net change in cash is 130%. So right now they have about $441 million in their reserves. Cost of revenue has also increased by 11.37%. Now this is how the stock is done in the last quarter. So far the numbers are looking good. Its revenue is increasing, margins are increasing. That's a good news. Now let's take a look at their fundamentals. So we will go over to PayPal's Zacks here, and let's see what the fundamentals look like for PayPal. So far, based on the numbers, I feel like this is a good stock. Right now it is available cheap. The revenue is increasing and looks good to me right now. It's not an aggressive growth stock at the moment. It used to give us a lot of growth was there in the previous couple of years, but currently it is growing at a steady rate. Now let's take a look at their fundamentals here. So fundamental charts. Under the charts, I'm going to take a look at fundamental charts here. And the first thing is EPS diluted. It is increasing, which is a good sign. It is currently at 1.09. So that's a good sign. The earning per share diluted is increasing quarter after quarter. And then first important thing, I'm going to take a look at revenue of trailing 12 months. Trailing 12 months means the past 12 months. So we'll go over to the revenue, and you can see here revenue is increasing steadily here. So in 2024, at this point in February 2024, the revenue was around 30,000, which is $30 billion, and currently it is at $31 billion. So there is an increase happened from January all the way to June of 2024. Okay, so there is an increase in the revenue, so that is a good thing. Now let's take a look at their expenses. So total expenses trailing 12 months. So expenses should go down, but it's not. There is a slight decrease of the expenses here, but it's also on the rise, which is not a good thing. But as long as the revenues are greater than the expenses, we are in the positive cash flow right now. So the expenses are around 26 billion, and if you looked at the previous one, the revenue was around $31 billion. So right now we do have a positive cash flow here. The revenues are more than expenses, but also their expenses are increasing. Now let's take a look at the gross profit. So gross profit from the last 12 months is also on the rise. You can see here the profit is increasing. Currently it is at around $12 billion. So the gross profit is also increasing. It went down from $12 billion all the way to $11 billion in 2022, but from since then it is going up and up. Then it went down again in June of 2023, and from June it went down in September of 2023, but from since then it is on the rise. So the gross profit is also increasing, which is a good sign. So based on this figure, I think the stock is a good buying at the moment. The PE is less, the profit is increasing, even though they're increasing at a very slower rate, but it is increasing. Revenue is also increasing. Then the next one we have is their margins. Now, if their margins are increasing or decreasing, ideally the margins should increase. But let's see if their margins are increasing. No, their margins are decreasing, but they're not decreasing by a lot. You can see here in June of 2021, their margins were around 48%. It went down to 39.32%. So there is a decrease of about 10% here, 48 to about 39, around 9%. But that's fine. The margins are decreasing, but I can ignore this figure at the moment. Now let's take a look at their PE ratio, price to earnings. So their price to earnings should be less, and it has dropped significantly. So in around February 2021, their price to earnings was 108. So that is a lot. Okay, and now it has dropped to 14.77. So it is definitely a cheap stock at the moment to buy, and it is not just a cheap stock, it is also a growth stock, which is giving you about 8 to 9% of revenue growth every quarter. So 14.77 looks good to me. It is below the industry standards. And then the last but not the least, we will look at the price to sales ratio. This should also go down, and you can see here it is going down, and currently it is at 2.08, which is good. So all these numbers tell me PayPal is a good buying option for you right now. I strongly recommend you. That is my analysis of PayPal stock. It is currently growing. Revenues are increasing. The profits are also increasing. Margins have slightly dropped. But the other important thing is the PE ratio has dropped, which is a good sign. PS ratio has dropped. That is another good sign. So all these tell me it is a cheap stock to buy at the moment and hold for next couple of years. That is my analysis. Now, what do you think of the stock? Do let me know in the comment section. And also you tell me if what is the other stocks you want to get analysis done on, and I'll try my best to do the full stock analysis for you. I hope you enjoyed today's video and you liked my analysis. Let me know what you think in the comment section. And if you have not subscribed to the channel, please subscribe to the channel and do like the video so you don't miss any more videos from the channel. I wish you all the very best. Thank you very much and have a wonderful rest of the day. Bye-bye. Take care.